we used to like throw out $1 million. We used to be like a casual 500K. Now 126K makes waves.
As usual, it always comes down to money printing, credit creation. The US-Iran war has been a catalytic effect to push these themes.
Arthur Hayes just made one of the most coherent Bitcoin bull cases I've heard in a while. And 126K is just the headline. The real argument is about where money is actually coming from right now and why most people are tracking the wrong signals. We're going line by line through this one, so make sure you stay to the end. Also, if you like this content, please like and subscribe. It really helps the YouTube algorithm, so more people will see this. Let's get into it.
On one hand, you have sort of the AI buildup and this race between the United States and China to host the most amount of machine intelligence within their squiggly line borders. And that requires a fuck ton of capex. What's the 2026 number? Something like 700 billion is the expected spend by the hyperscalers, and the economics and the economic game theory that goes along with this means that they're going to continue to spend more and more money until there is an outside exogenous event from the market that forces them to stop. But even if they spend down all of their cash flows, both in the US and both in China, the word from on high is we need to be number one in tech. And number one in tech means AI. And that means the banks and the central bank, commercial banks and the central bank need to provide the credit. If Google runs out of free cash flow to build $1 trillion of capex, and we're still in this sort of AI meta, then JP Morgan needs to step up to the plate and lend them the money. And they will, because at the end of the day, you have sort of the government saying AI is the most important thing to us. It's a national security effort. It's an economic effort. It's this competition between the two largest economic and military superpowers on AI. And both leaders, Trump and Xi, have bought into this. Whether you believe it's a misallocation of capital or not doesn't matter. From on high, AI is the thing. So banks will fall in line to do the lending. And we're starting to see this. If you look at construction and industrial loans in the banking sector, it's up and to the right, starting in middle of last year. And the Fed is obviously increasing its balance sheet using the reserve management purchases situation. The People's Bank of China, and they're also increasing their balance sheet. And the Chinese 10-year bond is yielding something like 1.5%. So they've got a lot of room to borrow money to build the stuff that's going to power AI. So we have that sort of credit creation on the technology side. And then when you talk about the war, every other country in the world is now recognizing that the United States and their explicit and implicit promises of free navigation, of going to fight wars to make sure that the good guys get their stuff on time, that's out of the window. The strait's still pretty much closed for most traffic, and certain nations are suffering, and they're sitting there like, okay, why did I own all these treasury bonds and all this big tech US equity? I should have built another pipeline if I'm the UAE. Why am I? This is not like not a known issue that there's this Persian Gulf place and there's this choke point. Like, we've been talking about this shit for longer than I've been alive, and yet it's all of a sudden it's a surprise that the UAE now cannot ship any of their shit out of the Persian Gulf because these motherfuckers didn't want to build a pipeline. Yet
it's also barely a surprise that Europe can't get gas if it closes. Like Europe's like, what?
Like, come on, guys.
It's like you're an entire continent. You didn't think about this?
Yeah. But yeah, let's just buy some more fucking treasury bonds, right? So I think that's ended. So whatever happens in this conflict and however it resolves, at the end of the day, everybody who has been caught off sides is going to realize that owning all these dollar paper assets does not protect you in the time of war. And so you need to move from just in time to just in case. That's highly inflationary, and it puts a dampener on U.S. financial markets, which Besson and Warsh are going to have to fill that plug that hole with printed money. And we're already starting to see that with sort of swap lines and discussions about who should get swap lines if they do what the U.S. says, or Besson railing against the Japanese Ministry of Finance and basically telling them what to do to make sure that they're not dumping treasuries in the market. Hey, why don't you use a swap line or other means to raise the dollars to buy the commodities to rebuild your infrastructure that you should have been building for the last 50 years. That's what's going to happen. And so I think these two things are very inflationary. It's dollar credit creation, yuan credit creation, and that's what's going to power crypto. But who cares? I mean, I think this, and you can argue with me in this. I've been very clear. I believe that the quantity of money is more important than the price. And the most important episode that recently that we can exhibit this phenomenon is during 2022, 2023, when we bottomed in that last cycle, if you want to call it that, and you had Fed funds at 5.5, and the engineering of reducing the reverse repo program from 2.5 trillion down to zero essentially powered stonks, powered crypto, powered real estate, right? And Fed funds is at 5.5, super restrictive, supposedly, right? Why would you think that financial markets can rally when you have Fed funds at one of the highest levels that it's been in 20, 30 years? So again, it's the quantity of money, not the price. As long as people can get that cash, it's flowing through the system, then assets like Bitcoin are going to perform very, very well. So I don't care if the Fed funds rate goes up or down. And I sort of think that's a red herring. I think it's always been about macro. I went on stage in Consensus in Miami and I said, we don't need no regulations, right? Who cares? Clarity Act, I hope Trump vetoes it if it ever gets to his desk. Don't need any of these regulations. If Bitcoin and crypto needed regulations to survive, we wouldn't be worth a dime. Because what's the point? If you're just going to have another Fugazi derivative that sits on some member of the financial system's balance sheet, we got that. We don't need that. What's the point? And I think people miss this distinction. The reason why banks want to offer this product to their clients is because the product does something for its client. It's a non-correlated asset that's done very, very well in inflationary environments and environments when lots of fiat has been created. Obviously, their clients want to have some of that, and the bank is in the business of making fees and providing the product that their clients want. So sure, they want to onboard crypto, and they should be allowed to do that. But other than that, why are we bending over backwards to try to institutionalize Bitcoin? You're essentially just saying what you've actually built for the last 15 years is a zero, and we just want to have another piece of shit financial product that's going to go to zero when some small shitty bank goes under.
Yeah, I'm kind of feeling that way. And I've been saying for a while, ever since Coinbase killed the Clarity Act, I was like, how the fuck does Brian Armstrong have anything to do with killing the Clarity Act? Are we really saying the quiet parts out loud about the lobbies and the money now? Because last I checked, he's not a senator, and then I started digging more deeply into it. I had a conversation with Chris Giancarlo, who used to be the head of CFTC. And he actually said to me flat out, he was like, the Genius Act, he's like, it's not great, and everybody was cheering the Genius Act. He's like, now you have Circle, and he's like, you have private companies and the government can see your transactions. It's the worse than a CBDC. And he's like, and the Clarity Act is so that the banks can do what they want in the industry, not so that crypto has rules. He's like, banks can't do all the things that Coinbase can right now and they want to. He's like, and that's what the Clarity Act is really about. It's just really interesting. And it echoes your point. I mean, Coinbase has 120, 130 million funded accounts. Stable coins are $300 billion. Crypto doesn't need. The Clarity Act is more likely to just allow banks to co-opt it.
The Hyperliquid tokenomics do exactly what they should do. And now, obviously, the perp exchange business is not the first people to do this. DYDX, GMX, and there's so many people who've done on-chain perps, but the tokenomics were Fugazi in most respects. Lots of VC bags, interesting emission schedules, whatever, right? But we know with Hyperliquid, and we've seen on-chain, 97% of revenue, buy back Hype and burn it. And that is why I'm a bag holder of Hype, and I think that other bag holders are very happy because we see a direct correlation to Hyperliquid does lots of trading volume. They earn fees. The fees come to me as the token holder. And even today, and obviously I advise a lot of projects, and I say it's very, very simple, guys. And I don't want to hear excuses about why you can't do it. No one gives a fuck about your excuses of why you make money and none of that money comes to me as a token holder. I don't care about what your lawyer said or what your advisor said or what your big ass VC said. If you make all this money and I don't see any of it, fuck your token, go to zero. And finally, we've gotten to that stance after doing this since 2017 in terms of big ICOs, and people aren't feeling it anymore. If they're not seeing any money in their pocket from success of the protocol, then fuck it. I don't need to own this token. And I think that's a maturation of the space.
Yeah, I not even picking on anybody, but it's the same debate that you can always have about owning Ripple shares versus XRP as a token. And these companies that have, you can basically get the value out of a stock, or you can buy the token that's being used to fund the value of the stock. Circle just, they had their announcement on ARK. They raised $222 million in a token pre-sale from BlackRock, Apollo, and literally everybody else. And I'm like, damn, our new KOLs are BlackRock and Apollo, doing pre-sale token launches. What's their vesting? You know, like it's really wild, but I still don't like, why would you own ARC token necessarily versus owning Circle stock?
Right. You can trade Circle stock right now. You can't trade ARC. I'm pretty sure that, you know, BlackRock's probably stuck in some, you know, 2-year lockup, whatever deal that they
One of
signed.
us.
Yeah. They're gonna figure out exactly what it means. That lockup, bro.
He's checking out his vesting schedule. He's like,
yeah, hitting them OTCs, term sheet deals in the fucking Telegram chat. That you can do a layer of fake? I don't think so.
You know, what's interesting though is like, you obviously, I know that you're a Hyperliquid bull, and honestly, I don't own it, and I feel stupid because it's just screaming that,
hey man,
that
you
I
can
should.
do it right now. Do it on the
yeah,
show.
no, I might actually, but like 21 shares launches T Hype. I'm calling it T Hype. It might be THIP. I don't know how to pronounce the second one. TXXXH on NASDAQ, the first US ETFs tracking Hyperliquid. First of all, I think that Matt Hogan said it, but I think this is like the end of the single asset ETF era ends right here at Hyperliquid. Like I don't know. Yeah, but I just think like, you know, now we're going to get indexes and stuff. I think that the market has an appetite for this one. It did, I think modest inflows in the first day, but like how many more of these can we get? But I think it actually matters that you have some sort of like level of institutional stamp of approval in the form of an ETF, even if it's a smaller one. And this just might be another case for Hyperliquid. It's at 1.8 million in day one volume.
ETFs for a lot of people. Obviously, Hype is special because it's a extinction level event for centralized exchanges. A well-run DEX with a lot of market mind share and a growing market share and permissionless trading and doing everything well and properly is an extinction level event for the centralized exchange, because centralized exchanges make all their money from very good traders taking money from dumb retail traders. Yeah. That's literally all it is, and that's the same in traditional markets as well.
Yeah.
And so if you're saying, hey, retail trader, not only can you own this token and earn a percentage of profits, right, of the thing that you're funding, but you can trade the newest shit coin. You can trade 20x leverage oil on the weekend. And all you got to do is connect your wallet. You have to deal with some dumb exchange customer service representative, and it's a much better trading experience. That is why, a lot of exchanges don't let you trade Hype spot, or it's very difficult. Right. And so for a lot of people, like, oh, I get the Hyperliquid thing, but like, how do I buy it? Like, I don't understand how I get the Hyperliquid token. It's not on the largest CEX that I'm familiar with. And so I'm sort of out of the game. So I think some of these ETFs will bring a different type of person who understands the Hype story, but for whatever reason, it was too hard for them to buy the token.
Yeah, that makes perfect sense. You created the perpetual swap, and here we are talking about Hyperliquid. Like, you literally invented it. What is it like to see that now we're having conversation about perpetual swaps coming to the stock market, like literally to everything? And then you have like prediction markets that are now adding perpetual swaps to the prediction markets. You invented this.
I fucking love it. It's awesome. It's very validating for what myself and the team created back in 2016, that this financial product has become this ubiquitous. And at least, obviously, I've made a lot of money and, being the father of perps and all that, but like on an ego level, like I hope that Hyperliquid or whoever comes after them, destroys the CME, the NYSE, the Eurex, like all these exchanges, and just says like, we have a better product. We have better product market fit. We are able to allow 7 billion people to trade whatever the fuck they want to trade and using leverage, and go fuck yourself. And I hope that, the Hyperliquid or someone like them continues on this journey. And I'm super proud of what Jeff and his team have built.
I mean, how do you then loop in prediction markets, right? So you like, I would say perp swaps were like, that was the like just the tip of degeneracy, a little bit. But now you got like, people with inside knowledge of shit that's going to happen tomorrow, potentially being able to bet on leverage on that event, and nobody can stop them.
I think it's great. I've gone on record saying I think insider trading should be legalized. There should be nothing you should not be allowed to trade. Information should be free. And yeah, if you have inside information, I want to know about it. Why I think it's kept in the shadows? Why, and then certain people can insider trade and certain people can't. So you get all this, volatility in the price. It makes for a much better trading experience if all information at all times is presented in the market. And then we as traders can make a decision on a trade. People who use these signals can inform their decision-making and running events. I think insider trading is great.
So, and I guess that if you believe that, then prediction markets does it on steroids because you can basically probably, I mean, I guess if you're smart enough or you have an edge, you can see those insider trades in the market basically based on the odds and the spreads versus other platforms and basically get on sides with the insider trader. I mean, is that the idea?
Yeah, and I'm sure there's some sort of like signal to noise, factor analysis that quants can do, and I'm sure they're doing it, right? Like Friday night, is Trump going to bomb Iran or not, right? And people are looking at polymarket, the different markets, seeing if there's a trend that's developing, somebody placing some order on some esoteric market to sort of like make a bunch of money because they already know what he's going to decide to do, right? These are sort of things that we want all this information in the market.
Nancy Pelosi loves to hear that.
Well, Nancy Pelosi wouldn't be such a good trader if everybody could insider trade. Let's put it that way.
I guess that's the point, is that nobody has an edge if everybody has the edge.
I have an Ethereum bag. It's been there for a while. Ethereum will do what it does. I'm very bullish on Zcash, the privacy narrative. I think that as the understanding of what AI can do with data sets from big tech and big government in terms of de-anonymizing transactions and tracking fund flows, people are going to demand some privacy over the internet with money. And that is, in my opinion, Zcash, and which is why I think that it belongs in every crypto person's portfolio. Obviously, maybe you don't believe in Zcash, maybe it's Monero or something else, but pick one, right? And so I particularly believe that Zcash is the one. And I have to say, looking at Maelstrom's portfolio, it's probably our second largest crypto asset outside of Bitcoin.
Zcash caught fire 6 months ago, whatever, maybe a year. Everybody started talking about it at the same time. And now that privacy narrative is everywhere. I mean, this is, Bitwise CIO Matt Hogan says privacy could become crypto's next killer app. Now, I'm not sure how that aligns with Art, Canton, and Tempo. I know Canton.
Art and Canton, that's not privacy at all. Like, when you see
Canton, it's privacy it's privacy for Citadel to not have their order flow be public, but it's not privacy for you and me to send each other cash from the table at 11 that we didn't want people to know about because everybody is off. I was there. I was at the party.
How was it? Was it fun?
It was fun. Of course it was fun. It was it was fun. Worst DJ I've ever heard in my entire life.
Yeah, I'm over. I'd rather go across the street to Space.
Yeah, Space is better. Historically, and it's been there. It's the OG. I mean, I can remember some winter music conferences, being on the outside deck at Space at noon, and I literally don't know if it's Wednesday or Monday. So
yeah,
good time. I can't do that anymore, in the same way. But privacy really seemingly has emerged here, and what you're talking about is privacy in transactions between individuals, not privacy for institutions here.
Correct.
Yeah, and why not Monero? Why Zcash? Why not Monero? Or is it just choose your own?
I mean, I've read some things about the cryptography behind Monero. So Monero is obviously ring signatures, and you're able. And I'm not a cryptographer, so I'm sure I'm butchering this a bit. It's a different way of essentially achieving privacy, and some governments have been able to de-anonymize it. It's very difficult to do, but they have been able to do it. You can probably Google. There's a Japanese criminal case about the government there was able to de-anonymize some Monero transactions by a particular substantive investigation. Now, Zcash, with some of the upgrades, there's no more trusted setup. And I remember being super bullish about Zcash in 2016 when it was the hottest shitcoin around. Privacy back then was such a thing, right? Massive launch. Obviously, the price spiked with $3,000 a coin, and dropped 99%, and all sorts of fun and games in that market. But one of the big problems was that you had to trust that Zuko and the gang, when they did this whole elaborate sort of security setup, weren't fucking you. But they removed that in one of the subsequent upgrades, and so I believe from a cryptography perspective, Zcash is the most private of the offerings out there, which is why that's the one that I'm backing.
And it seems like enough people like it that it also gets the narrative momentum that, if you're going to choose one, you might as well choose the one that a lot of people are talking about on Twitter.
Yeah. But again, people have been talking about Monero as well. So I think it's a race between pretty much Monero or Zcash.
Look, Arthur Hayes is one of the few people in this space who has been consistently right about macro. In the framework he laid out today, AI credit creation, deglobalization, quantity of money over rate policy, that's a coherent bull thesis that most people are sleeping on. Whether Bitcoin hits 126K or not, the reasoning matters. If this video gave you something to think about, subscribe. We bring these conversations to you every week. Drop your thoughts in the comments. Do you agree with Arthur? Thanks for staying to the end. See you in the next one.